Our next guest, one of several analysts who raised their price targets on the stock today. Still, our guest saying the fight is far from over for Intel. He's still got a market perform rating. Stacy Rasgon is with us, Bernstein Managing Director and Senior Analyst. Stacy, you said in your note you were surprised at that initial pop in the shares, and indeed, it's kind of coming back down to earth.
Yeah, I really was. I mean, look, on the surface, it was good. You know, they beat the quarter. Core markets, PCs and servers a little better, which I think should have been expected, but they were a little better. And they said they were actually supply constrained. They said demand exceeds supply. So that on the surface, that sounds good. And I think that's why the stock was up. But you start to dig in. The reason they're supply constrained, it's on their older generation parts. They're 10 nanometer and 7 nanometer parts. That's because their older parts at this point are offering more value to customers than their newer parts. And frankly, they'd gotten rid of like equipment to make those older parts a few quarters ago anyway. So that's actually why they're supply constrained, is because nobody wants to buy the newer stuff. And then, you know, he made some comments on 18A, which is their new process that they are now ramping into production. And everybody's been concerned about yields and everything. And he basically said, the CFO said, yields are kind of adequate for the ramp, but it doesn't sound like they're in a great place. And he kind of suggested they wouldn't be in sort of like where they really want them to be probably until the end of next year. So it does sound like that yield ramp is taking a while and maybe longer than people expected. And so you start to tie all of that out, you know, strong demand, which by the way is probably temporary, like it's Windows end of life and everything else. Tight supply, but it's because, you know, they're people are buying the older stuff rather than the newer stuff. And then like a yield trajectory that actually didn't actually sound that great. I'm actually not surprised it's coming back to earth now. This is more in line with what I might have expected. Maybe it just took some time for people to dig through the results, because the headline numbers were actually pretty good.
I mean, and even if you look at the sort of breakdown in their various businesses, they did see a boost in revenue in their biggest business. That's the client computing group. Revenue there was up 5%, but revenue in data center fell 1% year over year, and foundry revenue was down 2%. So where is the opportunity, the biggest realistic opportunity for growth if you look over the next year?
Yeah, you bet. So number one, don't look at the foundry revenue. That's internal. That's what they're charging their product business to use the fabs. That gets netted out, so that doesn't mean anything. Client was strong. Look, PCs are pretty strong right now. I think PCs from an end market shipment basis were up almost 10% sequentially. They're pretty strong. That's the Windows end of life, though. I mean, we've seen those cycles in the past. I actually worry. I think PCs this year in general will be pretty good. I worry that it makes next year tough, because that end of life process doesn't last forever. And then on the server side, they're claiming supply constraints, like limiting some of this. In fact, if you look at next quarter, they're actually, because they're limited on supply, they're going to prioritize servers. So they actually guided like data center up pretty meaningfully sequentially into Q4, and they guided client down because they're trying to parse what they use their capacity for. If I'm looking out into next year, like what drives the growth, I mean, one might hope that the server market can offer some growth. It's been pretty weak for a while. Maybe that's coming back. Although even there, you know, they're losing a lot of share to their competitor. On the client side, I'm not actually convinced that this upside sustains. And I actually think that CPUs have been overshipping PCs for the last 5, 6, 7 quarters pretty meaningfully. So I worry that impacts the PC opportunity next year. And then on the AI side, I mean, they're trying, but I mean, they don't really have much of a roadmap to speak of, specific on like AI accelerators and things to compete with NVIDIA and others. I still think it's going to be a slog. Like I said, I mean, I don't want to be too, like, they're in a better place. Like they got the balance sheet in a better spot. Again, it came at a pretty high cost given all the dilution, but they got cash on the balance sheet. They're taking some of the debt off. They are ramping some of the new stuff, and at least in the near term, the core markets are a little better. So I mean, I don't want to take that away from them. But we are very early on this turnaround. I mean, like I always say, I've said this before, it took 10 years to break it. It's probably going to take 10 years to fix it. We're very early in that, and I think it's too early, much too early to claim victory here. And again, I think we're starting to see that a little bit this morning.
Yeah. Hey, Stacy, we were just showing the influx of investments that Intel has gotten, and we know the highest profile ones from NVIDIA and from the government. But you know, you have the SoftBank investment too. What does that do for Intel ultimately?
Well, I mean, it gives them some breathing room, right? Yeah. I mean, they were burning considerable amounts of cash. They had a lot of debt, and so that was causing problems. And frankly, to the extent if they actually are going to decide to build out, 18A and 14A and build out a foundry business in a bigger way, they need cash to deploy that capacity. And so, but they got even more than this because they sold half of their Altera business and they sold some Mobileye shares in the quarter too. So
right.
all in, once they get the NVIDIA money, it's probably closer to $20 billion.
Yeah.
So that clearly helps, right? And again, it buys them some breathing room. So like that's all good. And if they decide to build that capacity, it gives them a little bit of more of a window to build that. Again, though, before they need the capacity, though, they need customers. And before they can get customers, they need to prove that they have capability. And they said good things. Yes, they said we're more positive. Unfortunately, we've got a lot of quote unquote engagements.
Yeah.
Again, it's still very early. They've we probably won't know for another 18 months whether or not like 14A is really going to be good enough like to drive like material like customer commitments or not. And again, they've even said they're not going to put capacity in place until they have those commitments. It's going to be a while, but the money at least certainly does buy them some breathing room. They're not quite in quite of as precarious a position as they were, say, 6 months ago.
Stacy, before I let you go, I got to ask you a question about AMD too, because this stock's ripping again today. It's up 7%.
Oh, yeah.
It's at a record. And it's just so interesting because NVIDIA has dominated the discourse for so long that AMD kind of snuck in here. You've got a market perform, I believe, on AMD.
Yeah.
What do you think happens now?
Yeah, and I always say, I'm always the wrong guy to talk about the bull case on AMD. I've never quite been able to make a successful bull call on the stock, so I'm always the wrong guy to talk about it. However, I'm not surprised it's running today because, again, just based on what Intel said, if they are supply constrained, if the demand is actually there, that demand is going to go somewhere, right? And AMD is the next one in line, right? So I'm not surprised on that. And then on the AI side, you have to remember, NVIDIA has dominated, and they're still dominating. That being said, like the call on AMD for a long time was like, hey, Lisa said it's a $500 billion opportunity. If they just get 5%, that's $25 billion, which the street's probably there now on the back of the OpenAI stuff. But for AMD, that's enough. They don't have to go out right now and do, $200 billion in AI sales like NVIDIA probably has to. And again, AMD to their credit, they're slowly but surely trying to crank away. Now NVIDIA is not standing still. Like it's very, very difficult. But I mean, the idea that the market is so big and AMD can get a little bit of a slice, and for them that could be big enough. I mean, I understand that. I also think tactically, we wrote this a few days ago. The near-term setup into AMD's quarter is probably pretty good. Again, given Intel's issues, there may be some upside. The end markets are pretty good. Again, servers and things are good. These are all end markets where they've been taking share. And if you think about the last few quarters for AMD, what's disappointing on their earnings has been the near-term AI numbers have been kind of lackluster.
Right.
Even if they are lackluster, still, like, does anybody care? Because everybody really now is in it for the OpenAI deal. That doesn't come for a year. So, like, right now you can dream it can be as big as you want, right? So even if the near-term stuff is still lackluster, I don't know. But even if it is, I feel like maybe it just doesn't matter as much, given people are looking, to the end of next year,
right,
for that OpenAI.
Yeah, maybe that's the headline for this whole industry for the next year: when dreams meet reality. And maybe it'll be match their dreams. We'll have to wait and see. Stacy, thank you so much. It's good to see you.